Okay, so hello and welcome. I'm Stephen Pearl, CEO of neoeco, and I want to thank you for joining today's session. Originally, I think we'd focus this webinar specifically around financially integrated sustainability management, or FiSM, as we are coining it. But the UK government's public consultation on the new UK SRS just opened, in fact, last week. And it's huge news to both corporate reporters and accounting firms supporting them. So I think with that in mind, I'd like to just touch a little bit on that today, but doing a bit of both. What I intend to do is to break down what's in the UK SRS proposals and show you how FiSM can make these new requirements not just manageable, but strategic. And of course, perhaps one of the reasons you're all joining the call today is to have a bit of a walkthrough of the platform and show you FiSM in action. So let's start with the global picture. So as of the 30th of June, yesterday, as of writing, we have 36 jurisdictions that are adopting and preparing to adopt the ISSB sustainability standards. Now, these 36 jurisdictions represent nearly 55% of global GDP. That's 40% of global market capitalization and 50% of global greenhouse gas emissions. Now, what that's telling us now is that this isn't an incremental change. This is a structural transformation in sustainability reporting standards, and the emergence of, I'll allude to in a minute, is the financially integrated sustainability standard. And as I mentioned before, with the announcement of the UK SRS standards, the UK is at the forefront. And it's among the jurisdictions that have finalized, or in the process of finalizing their standards, which are based on the ISSB's IFRS S1 and S2 standards. So with that in mind, whether you're advising clients or preparing for disclosures internally, today's session, I'm going to help you understand what the UK SRS is and what you kind of need to know about it. So where we're at with the UK SRS is that we're currently in what's called a public consultation phase. And what this is looking at is essentially taking the IFRS S1 and S2 standards. They've gone through a consultation period with some experts, and they've made some amendments and some changes. And the idea is that there's an open consultation to wider stakeholders to essentially feedback on the changes that they have made. And there's an open opportunity to shape these standards for wider stakeholders in terms of feeding back on those. This is led by the Department for Business and Trade. So in terms of a timeline, the public consultation was opened last week, and it's going to run essentially to, I think that's 17th of September. So we have until that time to digest the standards and then feed back. The final standards then are expected to be adjusted and go through another sort of consultation. I think some of the things that are going to be talked about in terms of the changes will be around the implementation, or at least the phased implementation and potential transition reliefs, which we'll go into in a minute. And I think particularly around scope 3 and finance emissions, and whether or not, or the sort of the phased in approach of them as well. And I'm expecting by the end of Q3, Q4, we'll be in a position whereby a reporting cycle might start. So if we're looking into end of 2025, beginning of 2026, I think what we're going to start to see is early adopters starting to prepare for the UK SRS, looking at system implementation, piloting some disclosures. That's something that we're working with businesses on at the moment at neoeco. One of the key focuses is around materiality, judgments, control environments, and data readiness. So I think for reporting periods 2026, that will be a key consideration to get ahead early on those. And what we're expecting is that the application will be to public interest entities only. So what I mean by that is sort of UK listed companies particularly might come into the first wave of companies that come in, and also typically perhaps any other sort of government connected companies that would be of public interest. So let's just take a bit of a step back and look at the ISSB standards and how they sort of interact with what we're trying to achieve here, because this is absolutely fundamental to how neoeco is built and financially integrated sustainability management, the category that we are pioneering, essentially. So the ISSB sets out to create decision-useful, investor-focused sustainability disclosures that integrate with financial reporting. And there's some really, really key words in here that we need to unpack a little bit. First of all, it's that investor-focused lens. So this is a bit of a departure from a lot of existing frameworks out there, perhaps even including CSRD to some extent, and the European framework, that we're looking purely at an economic lens or an economic reality of these disclosures and how this impacts the share value, essentially, of a business. And the other key element here is that it's an integration with financial reporting. So this means that it's something that has to sit alongside the disclosures in your financial statements, in your financial reports. So it's something that cannot be decoupled from finance any longer. If we take that back to what that means from a UK perspective, and some of the drivers around this, which is not just UK focused, but other global jurisdictions that have adopted this have designed it for legal local enforceability. So for example, in the UK, it means that it's going to be adopted under the Companies Act for practical adoption across various sectors. So on the one hand, we've got an investor focused financial reporting element to this. And on the other hand, we have regulation driven legal enforceability, which is where this is going to be driven to. So let's just have a look at what the difference is between the ISSB, which is the global baseline, which everyone is using as a basis to adapt, and what the UK SRS current disclosures have drafted. So it's just worth just reiterating the point that the standards have been drafted and they are still in discussion, and so there's a chance that these can change and feedback. But here's what the first round of feedback essentially is telling us. So the ISSB is a global framework. Obviously, the UK one will apply to UK entities or entities in the UK which have significant influence. We've got focused on enterprise value, climate-related risks, and financial materiality. So actually, interestingly, one of the thoughts was that the UK might just adopt the climate-related element of the disclosures, but actually they've applied the same principles of S1 and S2. So that's slightly broader than just climate-related risks and opportunities. It's the same principle, again, interpreted through the UK company law lens. And one of the key departures, I would say, at this stage is in the sort of the transitional reliefs, being that the ISSB requires full scope 3 disclosure, whereas there's some transitional relief within the UK SRS, which means that you can defer disclosing scope 3 emissions. I have some thoughts on that, which I'll get to in a minute. Within the ISSB global baseline, there's mandatory disclosure of financed emissions. And just for informational purposes, what financed emissions are within scope 3, a bank or a financial institution will have to disclose emissions based from their lending activities, essentially. And one of the challenges there, perceived challenges there, is that it's very, very difficult to get hold of this information. It's a bit, the return on the ability to get that information in is not going to be timely for reporting purposes, and not a good use of resources, their position. Mandatory disclosures are obviously required under the global baseline, but at the moment, the financed emissions element is optional for investors and financial institutions. Now, there's some quite interesting work that we are doing at the moment with financial institutions to essentially automate a lot of that process. So I think we'll find, hopefully over the course of time, that those disclosures will be more encompassing. The other thing that's still required is that the judgment element is still required and prescriptive. Now, another key element, looking at this from a high level, is that some of the language has been softened within the UK standards. And basically, this is to allow a little bit more discretion and to be not so harsh and all-encompassing. I think it just softens the disclosure element for the report preparer. And then we have the governance, which is aligned to international standards. Obviously, the UK has its own corporate governance code, and some of the wording has been reframed. So just to sort of recap what the top 5, okay, red lines were, just to go into a bit more detail. Scope 3 relief we talked about. There's going to be transitional reliefs that apply, which are not mandatory from day one. And in my view, we can automate through solutions like neoeco Scope 3 reporting using AI. It's not the heavy lift, I think, that the reviewers of this standard had once thought. So that's something that we are going to be continuing to evaluate and consult with the UK government on. But as things stand, there is a transitional relief in terms of Scope 3 reporting. The other issue that we have with that is that probably for a lot of businesses, and most businesses, I would say, particularly UK service businesses, Scope 3 is going to be the highest impact, most material aspect in terms of reporting. So to not report that or disclose that raises some huge question marks on the usability of those reports right off the bat. But we shall see how that pans out. Again, like the judgment of the disclosures being softened, again, they're still required, but just there's more discretion in how they're explained, rather than being such absolute language in the ISSB, IFRS standards. The UK has just softened them slightly to make them a little bit digestible, I should think. And then the finance emissions being optional, investors not obligated to report finance emissions under UK SRS. Again, I think that's more due to practical issues, and I suspect that over time we should see a change in that. Again, one of the differences is the fact that the UK is not the first to the party here. We're not rolling out on the ISSB's initial timelines. See, they've been around for a few years now in terms of those standards. The UK has its own timeline, and I think it's taking consultation on that at the moment. So it hasn't given anything set in stone, but we're thinking that there might be a similar rollout to how they've done in other jurisdictions. Australia being a good example, where they had sort of tier 1, tier 2, tier 3, and the same in Europe, where they had sort of a tiered rollout of regulations. Typically around company size, it might be to do with balance sheet, number of employees, turnover. We shall see what they say, but I suspect that they're looking at the rollout across other jurisdictions and will apply something very similar to that. And then the government contextualize, again, it's adjusted to align with the UK Companies Act, not on global models. But I think just in a nutshell, what this draft is telling us is that the standards are very, very closely aligned. There's not anything really significant in terms of the differences. There's nothing unexpected in there. And I'd be interested and looking forward to receiving the feedback on that and seeing how other sort of stakeholders are considering the rollout of this. One of the benefits that the UK has had compared to other jurisdictions is that we've been able to look at what's happened in Europe in terms of the rollout, where possibly they've tried to do too much too soon in terms of the reporting, which has created a lot of pushback. Whereas this is, I feel, one, is a much more measured approach in terms of just focusing on climate-related impacts first. And two, the regulatory driver here is actually completely linked with the financials and financial performance, rather than the sort of the double materiality lens that Europe has in the CSRD. So I think the UK and those backing the ISSB are perhaps going to have more of an opportunity and more luck and success getting this off the ground than the CSRD in Europe. And as you can see, with half the global GDP already adopting or looking at adopting these standards, I think we're seeing this momentum shift now towards this being the key standard for reporting. So just wanted to sort of move into the next section around some of the practical changes and challenges. And actually, we can think of this in the context of UK SRS, but equally this is ISSB or ESG reporting or ESG corporate reporting more broadly. And what we're kind of looking at on the right-hand side is really where the state of play is in sustainability reporting. We've got different different departments within businesses, different operational units, all having their own data, all very siloed data, all borrowing from each other's data. Nothing's joined up, it's very unstructured, and actually it's completely fragmented. And even some of the biggest and forward-thinking companies in the world are having serious challenges connecting all of their data together. And it's not just connecting sustainability data and impact data, it's how do you connect that to finance, and how do you connect that to financially integrated disclosures, and also how do you think about it in terms of actually generating value from that data. So I think one of the things we're going to struggle with is just off the bat, what is material under the UK context? So the UK has its own ecosystem, its own challenges, its own environment, where its own climate, its own geography. All of these things need to be considered in the context of what is material under the UK SRS. The other thing is linking sustainability metrics to financial risks. So the underpinning element of the IFRS standards, S1 and S2, and the UK SRS standards is linking it back to financial performance, financial risk, because at the end of the day, investors need a consistent way to be able to benchmark companies and compare companies against each other when it comes to sustainability related risks, and they need to understand what that impact is. So how do you do that? That's quite a significant challenge. Disclosing judgments transparently. So a huge part of the standards require qualitative disclosures and qualitative judgments. That means that there's going to be a lot of interpretation required of the data. So there's going to be a challenge consistency of the disclosures. Again, if we circle back to what's the purpose of the ISSB, what's the purpose of these reports, is to create consistent, comparable data that we can make decisions on that link to financial performance. So being able to tell or benchmark these disclosures is going to be super important. And language in that sense is going to be really important to use. This is, I think, a huge challenge, perhaps where a lot of people start. It's handling the data gaps, and especially scope 3 reporting. Now, scope 3 reporting is seen as this abyss for most people. A lot of people can understand scope 1 and scope 2, which is the direct emissions and electricity, but where a lot of the activity in supply chain comes in, it creates a bit of a void in terms of knowledge gaps and understanding. However, I would suggest that it's not as difficult and scary to measure this as you would think, and I'll show you in the demo how we can solve that problem for you really easily. But there will be data gaps, and there will need to be some sort of mapping. And it's not just the data gaps within sustainability data you're collecting. You need to be looking at your financial statements and making sure that within there's the relevant disclosures that are required for sustainability reporting and climate change. And the other thing I would add in to some of the potential challenges that you need to be thinking about before going into this is what industry specific guidance is there. Now, SASB has been an interesting and a useful framework for getting deep into what needs to be disclosed and reported on. The UK has decided that you don't need to align yourself to the SASB standards, which are the industry-specific reporting requirements. They will act as a good guide, but this is all new reporting, you know, and I think there's going to be emerging industry-specific frameworks that you would need to look at. And it's, you know, talking from an accounting lens, you know, you can't just roll forward working papers from last year. You know, you're going to have to start these from scratch and build out your own workflow. So I just wanted to sort of wrap in what this actually then means for accounting and accountants. So in practice, clients are going to need advice, I would say, starting now, because there's going to be a phased rollout of this. It takes a lot to implement. It takes a lot of energy and time, especially to implement new systems and processes, and for some of these larger companies. There's an opportunity to get ahead in terms of the materiality judgments and some interpretation around the compliance elements of the disclosures. The way I would approach this is almost like a UK SRS or ISSB readiness project. And in business, if I was working in a sustainability team, I would be looking at our internal data sets, looking what we're already reporting, look at what reporting across some of the greenhouse gas, the sector reporting standards, maybe have a look at, even if we've got some CSRD requirements, we're started on that, and figure out what data we have, what data we're missing, and really focus in there just so that there's that preparedness for that. But the opportunity, I think, across business and practice, whether you're working internally or externally on these projects, is that there's an opportunity to embed ESG right now directly into the processes of business, which is what is needed to have a financially integrated reporting system, and just really position your client's business or your business as the driver for sustainability transformation through a financially integrated approach. You have to take a financially integrated approach. That's what the standards say you must do. So why not start now and start building out the processes to be able to do that? So we talked a lot about financially integrated sustainability management. So I'm just going to use the next 5 minutes just to talk about what that is, and then I'm going to go into the software, and I'll do an end-to-end walkthrough of what financially integrated sustainability management looks in sort of progress. So financially integrated sustainability management, or FiSM. So what this is a new category of reporting that we're pioneering, that brings together a load of guiding principles that align with financially integrated sustainability reporting, essentially. So the first guiding principle in financially integrated sustainability management is that data should be treated as a first-class citizen. So we wrote a manifesto, and we looked at the market over the last 18 months and picked all the holes, and looked at the regulations and thought, if we were to rebuild this back in the perfect way, how would we do this? So we're not, financially integrated sustainability management is a category. It's an idea. So any software solutions can create software to buy into this. We've created neoeco to solve these problems. So first being, data should be treated as a first-class citizen. So what we mean by that is that most ESG data today is going to be trapped in spreadsheets, PDF. There's no schema, there's no validation, no controls, and it needs to be treated in the sustainability data needs to be treated in the very same way that financial data is. And what that looks like is sort of audit fields, structured ingestion, and the next point, which is a ledger. That's kind of core to what we're doing. The next guiding principle through financially integrated sustainability management is that data extraction should be driven by AI You can't scale with consultants copying and pasting information. We need a scalable solution, and we need technology to do the work. And we need to do most of the work. So the perfect financially integrated sustainability management solution would be completely driven, probably 100% by AI in terms of being able to collect data, being able to process data, being able to automate, being able to do the anomaly detection, building in meta tagging, and generating the outputs with a reporting engine. That is the future. So any new approach to this solution must have AI front and center. Our third guiding principle to creating the perfect solution would be double entry financially integrated sustainability ledgers. So what we mean by that is, and this is absolutely core to everything that we're building through neoeco, is that every single ESG record must be structured and follow accounting procedures and reporting structures and be tied back to the financial ledgers. For example, every ton of carbon, it must be as traceable as every pound spent. And so this is super important because having a set of ledgers ties it back to your most trusted data source, the financial ledgers. We're not reinventing the wheel here. We're using what already works, what can already be audited, and what can already be validated to generate as much of this data as possible. The fourth guiding principle is that metadata and audit logs must be coded into every transaction. So you may also be aware that along with the announcements of the UK SRS, there's also a consultation on the broader applicability of assurance standards and how these are going to look. So essentially what's happening is that alongside of this consultation, there's going to be some validated and proved and rubber stamped auditing standards, probably connected to ISO 5000 that each auditor must follow to be able to audit sustainability data. And so to future-proof what you're doing, every single bit of metadata and audit logs must be coded into a transaction to protect the integrity of the audit process and the integrity of the value of the data that you have as well. So step 4, or guiding principle number 5, in the FiSM manifesto, sets out that output APIs must be made available. So with FiSM, reporting is an output, not just a 6-week project. So what we can do with that, or what we mean by that, is that you can generate an ISSB, a UK SRS, CSRD, or internal dashboards, all from the same single source of truth and in real time. So again, that's a core guiding principle of FiSM, is that there's got to be super real-time connectivity to other data sources and other environments and other software where that core data is going to be needed. But we have to live off one single source of truth. And then the final guiding principle, kind of linked to the output APIs concept, is that ESG reporting shouldn't lag 12 months behind. It has to be running in monthly or weekly cycles, in the very same way that your finance team runs their reporting cycles. You must be alerted to risks before they hit the report. Boards don't want a postcard from last year. They want a dashboard from last week. So we need to be moving this data into a real-time environment so that it can be managed and risks can be managed and the data can be used to actually be decision useful, which is part of the purpose of the ISSB reporting. So just one more slide before I jump into the product demo. So introducing the FIS ledger. So as I mentioned, at the core of what we've created is the financially integrated sustainable ledger. And how this starts is with financial ledger data. So we use ERP systems to connect and pull data from. And we'll extract all the records from there, the full integrity of the ledger data point. So we're bringing in a real rich data set. And one of the important reasons why financial ledger becomes the first layer of data is because the reporting and the reporting boundaries have to mirror the financial ledgers and the financial accounting periods. So we're measuring the right data set, and also what this does by leveraging and tying everything to the financial ledgers that have already been created. Obviously, this data we expect to be of the highest integrity. It's the financial ledgers. We can trust it. But what an auditor can do is to be able to validate information that we report all the way through to the accounting system or ERP system and to source records that way, making it much more trustworthy from an audit trail and penetration testing perspective. The next layer in terms of what the FiS ledger builds in is emissions, energy, water usage, HR platforms. So as a solution, neoeco is very heavy towards activity or consumption-based data points, not looking at an average spend methodology. Now, this can be quite labor-intensive and difficult to access this information, but we have ways and methods of extracting these data points from other systems that you can plug into, AI extraction from documents, or just plugging into things like energy meters. All of that can be done through neoeco and embedded within a FiS ledger. And the reason you need that information is twofold. One, because it acts as a baseline for impact calculations. But two, within some of the disclosures, you're going to require to disclose energy usage over a period of time and break down by energy types. All of that can be coded within a ledger data point and reproduced very quickly and very easily, just like you would do your management accounts. And then the third wheel to this is how that data gets calculated. And for to have a financially integrated solution that can actually operate at a granular transaction level. So what I mean by that is at a line item level or a ledger data point within a financial accounting software or ERP software system, we need to have a very specific methodology and approach to be able to run that calculation. A lot of these average impact factors, carbon databases just will not do. And so our approach is a life cycle sustainability assessment impact model. And without going into too much detail, what that enables us to do is to map an impact factor once reconciled across 90 different environmental, social, and governance impact factors, which can then be modeled. So the FiS ledger, as I'll show you in a minute, it's a centralized system of records, a centralized source of truth. It's something that sits across data sets. It doesn't replace any data sets. It's collecting the data and transforming it into auditable data for use for reporting purposes and obviously for assurance purposes. But the way I would look at this from an accountant's perspective is imagine trying to prepare a set of accounts without a trial balance or without the supporting ledgers. And then imagine trying to run a working paper, audit working paper set without that very same information. This is before financially integrated facility management and our solution. This is the current reality and the state of play. It's an almost impossible task. It's like doing an incomplete records job on a set of accounts. It's no wonder that there's an emergence and need for these new sustainability auditing standards, because there's just a very, very difficult way to do this. But one of the things, or one of the solutions, is by using the very same controls-led approach and embedding ledgers, and that's our solution to the audit problem and our solution to the reporting problem. So I'm going to stop now and jump into the solution, into the platform. And I'm just going to scroll to the home page for now. And I'll just walk you through, first of all, the dashboard, and just to show you how we put this together and how the financially integrated element shows up in this. So the dashboard is the first screen. You can kind of choose how you want to present data, but one of the first things just to draw your attention to is this metric in the middle, the top middle of the screen, and that's an intensity of spend metric. And because of the way that the data is structured within the solution and mapping to financial data points straight from the financial ledgers, we're able to use that data in very specific and very creative ways. One of the things that is really interesting to be able to benchmark, and one of the things I'm always interested in, is an intensity of spend metric. And what we're looking at here is how much kilogram of CO2 per pound spent the business has on average. Now we could break that down any which way we wanted to, by department, by supplier, by scope. All of these things are really, really interesting to look at and to use for benchmarking purposes. So that is one use case of having a financially integrated approach, is that you can look at very closely at cost at a transaction level within your disclosures and within your reporting outputs. And this data at the moment is real time. At the left-hand side, we can see total CO2. We have a data quality score, which is essentially an audit score. So you want to get that as high as 100% as possible. And what we're doing here is favoring collection of supporting activity data points and primary data. And if we go over to the right-hand side, we can see a date range and an impact category. A little bit further down, you can see I'm wanting to look at my impacts by suppliers and my impacts by account code within the financial ledgers. So the data is structured in exactly the same way that you would categorize and tag your financial data points, which is super important for accountants, because any management reports, any audit files, anything needs to tie back to the same integrity and structure of that data. One of the cool things, and one of the things that really sets us apart, I think, from other solutions, is the impact category. So we don't just do climate change. We're not a carbon calculation tool. We are a corporate LCA reporting, corporate sustainability reporting, ISSB, CSRD reporting solution. And just what I can show you here is really, really powerful. So we're just looking at climate change at the moment, but we can dig into different types of impact. We can break down different types of climate change impacts using our LCA modeling. So if I change that, we get a different dashboard and a different intensity spend metric. If I want to look at just acidification impacts across the business, I've got a dynamic dashboard that can look into that. And you can see that we have different intensity metrics and different impacts by supplier and scopes. So you can see just right off the bat how useful that would be, because we can chop and change data and visualize it in any which way we want to. But this is just an example of a sort of a Power BI style dashboard. You can create your own visualizations here, but just for demo purposes, I wanted to show you something fairly simple. So another super important element to the tool is being easy to set up, easy to integrate data, easy to import data. And you can see one of the first things we would do is to connect to your financial ledgers. So we have direct feeds in with things like QuickBooks, Xero, SAP, Microsoft Business Central. But we can also import CSV data very easily through the solution as well. We can also connect smart meters, energy meters to pull in data, depending on what you want to bring in. Once your accounting system has been integrated, we will then come to this transaction screen. And another point to note within here is the language that we're using. So one of the things that we are built around is processes, controls, and a lot of the language we're using will be familiar within fintech and finance and accounting space. So using language like reconciling data, ledgers, and compliance flows and trust centers, all of these things are really, really integral to how we are as a solution. You know, we're built for audit, and we are not. I'd tell you what we're not is one of these sort of more fluffy carbon calculator solutions that make recommendations. We are entirely about being able to have super accurate, validated, audited information and one shared system of record that can be used across stakeholders within the business. Now, our job is to make your job as easy as possible, get the best information that you can possibly get, and make sure that you comply with regulations. So within the transaction screen, what we're looking at here is the import of your financial ledger data points. And the way that this data gets mapped to an impact factor, you'll notice when I showed you that diagram of the financial ledgers and the operational activity data and the LCA engine, this is where that work gets done. So what we would do, I'm just going to show you a manual walkthrough of how information will get coded into this ledger point that I'll walk through in a minute, is that we select a transaction, and the transaction will pull a data point from our vast database. And you can see that we can search for some very specific products, very specific impact factors. We can find suppliers in here if we have data for, and you can break down by scopes, by data types, by location, which is going to be super important for global reporting. And you can sort of filter by the kind of databases, global databases that you might want to map data from. You can see we have a number of, well, 60,000 data points within here. And just to sort of link back to our manifesto and the guiding principles, auditability being absolutely essential, you can kind of see any data point and any sort of element within neoeco has a little audit flow or metadata tag. So you can kind of select these to see, well, we can see for this data point where the data has come from, what specifically is, a link to the website with the data point, the source, the date, the kilometer, and essentially where that has been used, or if it has been used within your impact calculations and the supporting calculation. So we would match, essentially what we're doing is we're mapping your ledger to a very specific LCA lifecycle assessment data point. And then in the back end, once it's mapped an impact factor, it's going to run a calculation based on one of two things. Whether you have an activity data point, which is what we want. So what I mean by that is, do you know how much fuel you consumed? Do you know the kilowatt hours of electricity used? Do you know how many miles that transaction relates to? How many, you know, what tonnage of CO2 was used? That's the data that we're trying to get our hands on. And that data lives in lots of interesting places. It can live in the financial ledgers. Quite often it doesn't. But if it lives in there, we can use AI to extract that and run a calculation based on that. But more likely, it's going to probably live in your wider ERP systems, your inventory management systems, your HR systems, and even systems like energy meters where you can grab energy bills. And equally, it could probably live in invoices and documents that may not have found their way into your ERP systems. All of which we have a way to automate that collection and leverage AI to extract that data, categorize it in a way that we need it for importing into here. So that's really what we're trying to get to. And that's fairly advanced in terms of data collection and granularity of data. So you can see here that we've got, for this invoice, for example, we've got 19,406.4 kilometers of within that calculation, and similar here we've got travel 1,300 in a train. And then what that does is it creates a calculation in the back end, which then runs that calculation not just for carbon impact for that transaction, but all of the other 95 different impacts at the same time for that ledger point. But this is quite a heavy lift, so we use AI, of course, to do all of this work for you. So we have an auto match function up here, which once you press select, you can map all transactions, and instantly it will map 100% of your ledger data points to activity data points to run a calculation. That is instant. That is really, really quick. Scope 1, 2, and 3 data that you have at your fingertips. Now that is a baseline. That's enough to get started. And actually, a lot of regulations don't go that far. They're happy with Scope 3 to have spend data. But as you can see, we found a solution to map Scope 1, 2, and 3 with AI at a very high precision. So once you've gone through and you've added your records, so your direct emissions might be another entry into the ledger, for example. Activity data, again, will be another entry into the ledger. Then what we come to is the core of what neoeco is. And this is the FiS ledger. So the FiS ledger, just to explain what we're looking at here, it's the integrity of the financial ledger. So we're bringing in all of that data, those data points. We're layering on top of that your activity data. So what I mean by that is the quantity of kilowatt hours, energy usage, the actual consumption data that's linked to that transaction. We're linking in a unit. We're linking in some a load of other additional data points from the database that we mapped it to, a methodology. And you can see as I scroll across here, that we have 95 different other impact factors that we're measuring impact for across that transaction. So you can see at a transaction level, we've got an enormous amount of data structured in exactly the same way that a financial transaction or financial ledger data is structured. This becomes incredibly valuable. So if you think about the point that I made that you wouldn't do a set of accounts without a trial balance and the supporting ledgers, well, now you have an ESG trial balance and an ESG set of ledgers to work from. And you have something that you can actually audit and validate and actually reconcile back to the financial statements where these disclosures live. So unless you have this solution, which very few would, then you are not going to be able to solve that problem and really be set up with assurance in mind and have trusted information. This ledger has direct APIs out to other systems. So this is, again, we're talking about cross collaboration efforts here within the team. We're wanting to connect data points, and what we aim to do is to be able to offer APIs into other reporting solutions. But how we want to be able to use the data here is in the report builder and the compliance center. So how do we turn that into something that is ISSB ready or UK SRS ready? And the way that we do that is through our compliance center. So within the compliance center, we have frameworks. So in terms of, it might be the ISSB, it could be a CSRD framework, it could be UK SRS or greenhouse gas protocol, anything that connects the controls and data that we have. In terms of how it fits together, if I come to this first page, you can see that you can select from a particular framework. So you can see here that I have activated the CSRD, ISSB, and greenhouse gas frameworks. How I might want to start with this is, okay, well, I need an ISO validated greenhouse gas emissions report. I would activate that and go through and complete my compliance flow. So this is essentially a little bit like your working papers guiding you through that standard. All of this is connected in with the ledger, so you can connect the data points. But to give you a bit of context in how this is put together, each step of the compliance flow is a control. So the auditors out there might understand or get a feel for how controls are used in the auditing process to be able to validate information. So every one of these steps is a control. Every one of these steps needs supporting evidence, and that evidence might look like a policy. So we might want to connect a policy within here. We might want to connect a very specific document in here. So it could be an audit trail document, a GHG inventory report, a governance responsibility matrix, all of the things that we need to start pulling evidence together for. And then within the frameworks, I'm just going to jump into the CSRD one for now, and let's run to climate change section, and this control. What this allows you to do through the Compliance Center is to put together the disclosures for the particular standard. So in this control, we're looking at defining a decarbonisation strategy. What we have here is an evidence readiness score and the text disclosure that you might want to put in. So again, a lot of the disclosures are qualitative and need supporting evidence, but equally we could add placeholders for data that brings in ledger data points and compares it over a period of time. So if I wanted to see what document was connected, I can see, okay, yeah, that's connected to a transition plan narrative document. And we have an approval process within each of these controls. So you'll have a preparer, a reviewer. You can assign these across different people in the team. For example, you might have someone in your business that is doing the social disclosures. So you can assign that section of those tasks to them. And equally, you can allow third-party read-only auditor access to this data as well. So it makes it really, really easy to get this information validated, ready for disclosure. How this information then links back. So if I go back to our reports and I open this up, and I'm going to just look at the CSRD one. I know we've been talking about ISSB, we have some templates there as well. But here we have sort of a pre-built structured report. So if you remember that neoeco is about getting the job done and being the most accurate and easy to use way of delivering these audited reports. This isn't for you. This isn't for publishing on your website as a marketing material. You can give this to your marketing team, but this structures the report for you. So you can kind of see here that each of those controls and the disclosure text comes into this pre-built report, and everything is tagged and validated in one place. And just to sort of join the dots and close the loop on how that data comes in. So all of that data in that FIS ledger that we talked about, for example, for CSRD, and there will be a similar disclosure. In fact, there is for ISSB aligned standards. We need to bring this data in. This is pre-structured automatic data that can be calculated off the back of the FIS ledger. Very easy to measure in whichever time cadence you want. So you can see we're looking at energy consumption. We've got activity data points in here, all broken down precisely how we need it. And the placeholder data automatically feeds into this report. Similarly, we need to be disclosing financially integrated metrics, energy intensity per net revenue. This is what this company disclosed in terms of financially integrated metrics. Again, we're bringing in ledger data, so we're going to know the revenue, we're going to know the costs, we're going to know the capex. All of these things can be brought in as part of the disclosure requirement, and dynamically. And not only dynamically, is that if someone needs to validate that information, they'll be able to trace that all the way back to the financial ledger data point and the financial statements, which is what we're aiming to set out here. And then finally, just another example of the dynamic data and use of the financially integrated sustainability ledger, just for a simple scope 1, 2, and 3 emissions report for disclosure purposes. This is sort of pre-tagged information in a report. You can see the data that we brought in dynamically. So you can see total CO2, emissions-based, location-based, market-based, anything that we can repurpose that ledger into, we can use it for this purposes. So in a nutshell, that's kind of how everything kind of connects through to the system. You can kind of see that we start with the data collection. We use AI to basically do all the heavy lifting. We bring that data, put it into this sort of reconciled financial ledger, which then acts as the center of gravity for everything else that your team will do. It becomes a shared source of data. It means that everyone's working from the same data, singing from the same hymn sheet, and finance can use it for their purposes, for their disclosures. We can use certain data sets or work on other data sets for sustainability teams. And the other thing is that we can be working across multiple standards simultaneously. So one of the really powerful things within neoeco is that you could be working on a greenhouse gas emissions report. Once this flow and the controls are completed, it's going to pre-populate and complete probably about 20% of, or maybe even more, of your climate-related disclosures. Certainly, it will probably pre-populate most of your metrics and targets within your ISSB disclosures. Similarly, if you're a big international organization and you have to report under CSRD, it will pre-populate the controls there as well. So you're recycling data, you're not doing the work more than once, and you're reusing those auditable data points across multiple standards and controls. It's super flexible. You can add your own custom reports, custom controls, other specific use cases as well. But the flexibility is really credible. And it's a place where all of your policies will live, all of your documents will live. So it really becomes that center of the world for all sustainability related matters and information and disclosures. Everything being in one place means that auditors are gonna love you and be your best friend essentially. But we've only got sort of two minutes to go here, so I'm just gonna go back into the slides and see whether we have any questions at this stage or anything that's popped up. It doesn't look like we have time for any, but I'll just round off now. And so what should you be doing? I would suggest we need to get our heads and read the UK SRS consultation draft, understand what's mandatory, optional, and judgment based. I would start with materiality and perhaps not wait until 2026 to start thinking about that if you know that you're in scope. Connect with finance and sustainability teams early. One of the big things that we see is that sustainability and finance are completely siloed departments. This is the chance to bring them both together and to get everyone on the same page. And the way to do that is by implementing the connective layer between the two, which is neoeco, our solution. Trial FiSM, see what if any, there are any data gaps. Schedule a one-to-one with us, and we can help you get audit ready in weeks and not months. And just remember, the financial systems evolved for trust, and sustainability data must meet the same bar, and that's the future, which is structured, auditable, and accountable data. A couple of last things from me. We have a UK SRS and ISSB disclosure checklist. Feel free to download that from our website. And the last thing is we're launching a new community around FiSM. Would love to hear from you if you're interested in joining. And yeah, I can let you know what the next steps will be for that. So that's all from me. Until next time, thanks everyone.